We are back with another powerful packed weekend this Saturday where we will explore three topics. The first one is how can investors stay ahead of the curve with multi-asset investing? We have seen a lot of market volatility in the last 2 months. The India VIX has doubled since the end of April. FIs have also pulled out a lot of money. So, should you wait or should you jump in before it's too late? The second is reviewing the IT sector, where we will talk about the business performance of top IT companies in India, the growth outlook for IT sector, and understanding whether it is the right time to invest in this sector. The third is banking on growth, where we will look at the opportunity in the banking sector, business performance of top banks, and understanding whether it is the right time to invest in this sector. So if you're interested in any of these three, click on the link below.
JSW Steel reported an all-time high sales volume of almost 25 million tons in FY24, up 11% year-on-year. JSW Steel said that it is going to invest 65,000 crores in the next 3 years to increase capacity to 43 million tons. Further, it is targeting 51 million tons by 2031. Tata Steel is targeting to double its capacity from 20 million tons to 40 million tons by 2030. Our own PSU, Steel Authority of India, is also targeting big capex plan. It recently received approval for 1 lakh crore capex, which will ramp up its capacity by 75% to 35 million tons by 2031. What's with these targets of the top 3 players by 2030? The National Steel Policy envisages India's steel capacity at 300 million tons by 2031, which means we can see an incremental demand of 12 million tons every year. The reason for such a steep target by the government is because of the expected steel consumption in India during this decade. The last 3 years were very good with double-digit growth rates. FY24, our steel consumption grew 13.4% year-on-year. A conservative growth trajectory for India is estimated to be between 7 to 10% growth during this decade. Now, unlike the last capex cycle, which was all about greenfield projects funded by debt, this decade is going to be more about brownfield projects funded by internal accruals. Despite Chinese imports doubling year on year in FY24, JSW Steel reported an EBITDA of 28,000 crores, which means capex of 20,000 to 22,000 crores every year is pretty much doable. JSW Steel is going to go from 28 million tons to 48 million tons in the next 3 years only on internal accruals without any increase in their leverage. And all of it is going to be brownfield because they have excess land in each of their 3 plants. The latest capex done by JSW Steel was estimated to be 4,300 crores per million ton. In USD terms, it was close to $500 per ton, whereas the global average is around $700 per ton. Even in India, a typical greenfield project will cost 7,000 crores per million ton, whereas JSW Steel is putting up a million ton brownfield capex at only 4,300 crores. Thus, the incremental ROE for all the steel players is going to be much higher and much more stable compared to the previous capex cycle. What's the antithesis then for these steel players? India turned a net importer of steel in FY24. Chinese imports, like I said, have doubled year on year in FY24. To make things much worse, the US President recently announced higher tariffs for Chinese imports, including steel products. This is going to impact Indian players because China will need to find newer countries to export their steel to. This will also lead to pricing disruption for Indian steel players. On one hand, the demand situation is very juicy for all the steel players, but on the other side, the supply side could be impacted because of this expected increase in Chinese imports. Will Chinese imports go up, or will China cut down on its steel production? It is $1 million question.